Hello guys, I hope everyone is doing great. This is once again I wanted to share with you this particular technique. Uh, Using the mathematics, we are going to predict the particular levels. From that level, we can expect the trend reversal or trend continuation, or maybe like the important swing levels. Okay, this is the WD Gann's method. Now WD Gann is the person who given the mathematical, geometrical, and along with astrological based trading strategies. His method of trading is completely different. It's purely based on time concepts, based on time, not based on the price. It's based on time. Okay, so the idea here is Gann have a different techniques, and Gann never revealed his own technique to the public, but based on his books, which I have referred, based on the the works he did, uh, so there are certain strategies available in the internet. So I just gone through those things, and I made this particular Excel, a simplified form of Excel. So this is one of the approach of the Gann. This is not a perfect approach, or this is not the perfect strategy which is Gann told, but this is my interpretation of Gann's work. Okay, this is my interpretation. I made this Excel based on my understanding of Gann, not Gann's understanding. Okay, so it may be wrong, it may be right, but I'm gonna give you the idea. You can use your own idea, or you can interpret this. You can give your own. You can create your own strategy also based on this. The idea is very simple here. Uh, you can see here I have mentioned swing high and swing low. You need to give the high price and low price here, and the formula will automatically find the difference between high and low. So it will take the high and low here, difference between the high and low, and that number will be square rooted. In school days you studied the square root formulas, right? I believe everyone would have studied. Square root is nothing but, suppose the number 4, the square root of number 4 is 2. So which means 2 into 2 is equal to 4, right? So the square root of number 4 is 2. So similarly, there will be high price and low price, and high minus low, you will get some number, and that number will be square rooted here, and that number will be plotted here in the Excel. The same number will be plotted here. Okay, and Gann given some levels. This is based on his working. I have taken this from his books. Gann given some levels, so we are multiplying that level with the square root number, and by multiplying this we will be getting the number of days here. Number of days. Now number of days cannot be a decimal, so that's the reason I just rounded off the days here. Okay, rounded off the days. Now also sometimes the days will be like only one digit, or maybe like a 1.5, something like that. So so that is also not enough information. That's the reason I just multiplied that with a 10. Okay, 10. And sometimes the number of days will be in 3 digits or 4 digits also. So in that case, 4 digit days means 4565 days, right? That is really big number. So that's the reason I just divided that into by 10. So by the way, we will be, if number of days is more than 3 digits, we will take a 2 digit. Okay, if number of days is in a single digits, we will take a 2 digit. So that's the reason I'm just multiplying by 10 and dividing by 10. Okay, the two things I have added, so which is not necessary, to be frank, but for simplifying the process, I just multiplied, just multiplication and division, nothing but this divided by 10, and this divided by this into 10, this into 10, and this divided by 10. Okay, I have taken the rounded off value into 10, rounded off value divided by 10. Okay, and that value is now rounded off here. So you can go through this formula. I will anyway share this Excel sheet with you guys, so you can go through what formulas I have used. It is very simple formulas. Okay, so the point here is very simple, guys. You need to find the low price. So low price, which means swing low, right? Swing low, let's say swing low is 10 rupee. Okay, then market moves up, it's create a swing high, right? Swing high, let's say swing high is 30 rupee. So what I'm going to do here is I will be putting 10 rupee in the low and 30 rupee in the high. Okay, so the difference will be 20, right? 20, and difference will be 20, and 20 will be, the formula will be squaring the 20, means square root of 20. So whatever value comes, that will be plotted here. Square root value will be plotted here, and that value we are multiplying with the Gann levels. Now Gann level is, you can something like, you can consider like a Fibonacci levels. Okay, Fibonacci levels are the right 50% is not a Fibonacci level, but you can say 61.8, 61.8, 78.6. They are Fibonacci levels, right? Similar to that, there is a Gann level. So Gann level we are going to multiply. Once we multiply, we will get the dates. So these dates are important. These dates, you can call this as a dates, or you can call this as a candles. Okay, so what we are going to do, we are going to find the swing low, and we are going to find the swing high. Okay, swing low to swing high, and we are going to take a lowest price, let's say 10 rupee, and we are going to take a highest price, let's say 30 rupees, and we are going to find the difference, and with the difference we are going to multiply with the Gann levels, and the results we will be getting a dates and rounded off dates. And what we are going to do here is, from this swing high, we are going to count the dates. We are going to see after, let's say here is 13, right? Let me put it here. Okay, let me put the value here. Let's say swing high is 30 rupees, swing low is 20 rupees or 10 rupees. So difference is 20, the square root value is 4.472, and that is the 4.472 is multiplied with the Gann levels, and we are getting the dates with the decimals. So I have rounded off the dates with 17, 29, like that. Now you can take any of these three, but I don't suggest the 2-digit or 1-digit number. So 2-digit number is good. 3-digit number also very big, so I don't want to calculate that. So 2-digit number. So what is the first number? First number is 17, right? 17. So let's say swing low this is, and market moved up and created swing high. Okay, from this swing high candle, the middle candle, from the middle candle I'm going to calculate 17 days. I'm going to see after 17 days. 17 days means in this it can be a day, it can be a 17 candles. 17 candles after that. Similarly, I'm going to see the 29 candles. From this swing high, I'm going to see 29 candles. After 29 candles. Similarly, 42 candles. Okay, 42 candles. After 17 candle, after 29 candle, after 42 candle, and etc, 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 you will be seeing some sort of reversals in the market. Some sort of reversals, or you will be getting the exactly the reversal points, or maybe after the reversal point or before the reversal points. Sometimes it will be giving you the false signals also, because trust me guys, this is just a method which I developed based on the Gann. It's not going to be perfect, it's not going to give you the 100% results. Okay, because Gann almost spent his 55 years for predicting the market. Okay, almost 50 years he researched about the market, more than 50 years. I'm not sure how many years he researched, but he researched half of his lifetime for predicting the markets. Okay, so he did not revealed everything. Okay, I'm just once again insisting this, the secrets is died with Gann. Okay, if you go to the internet, if you purchase any Gann related courses, it's waste of time. Don't purchase. Why? Because Gann never revealed his secrets. Gann never revealed it. Gann given some methods. Based on that methods, uh, some we many people have their own interpretation. Based on that, they have created the books and courses and etc etc. But Gann never revealed his own secrets. Okay, so this can be failing also. This can be failing, but you can make a use of it. If it is works, then then we can apply it into our market, right? Okay, so now let's go and see the charts, and let's do some actions. Let's take the tradingview.com. I'm going to take a daily chart. I prefer daily chart in this method. Now I know that daily charts are really slow, but most of the times when you apply the daily charts, it's working really well. That's the reason. Uh, that's the reason I'm applying. But you can apply this in the lower time frames also. But there is more confluences we need to see. We will discuss about that in the future, but as of now I'm going to give you the daily aspects. Okay, so let's take a daily chart of NZD USD. You can take any chart, but I'm taking NZD USD because I wanted to because we always taking the Euro USD, right? So I wanted to take a NZD USD, some different pair. So I have a swing low and swing high here, right? Swing low and swing high. Okay, so there is a let me take the swing low. If I bring the cursor here, I will get the open high low data here in the top, right? So I want to take a low and I want to take a high price. So I'm bringing the cursor here. So I'm getting the low price of 0.55118, 0.55118. So I'm gonna put this into the Excel sheet. 0.55118. Okay, 0.55118. This is the value, and this is the highest part. Okay, that is 0.65138, 0.65138, 0.65138. Now if you see, these values are decimal values, right? It's very small decimal value. It's not even a 1 2s, it's a decimal value. That's the reason I did this multiplication method. Okay, because if you see here, there is a price difference is 0.1002, and if you take a square root, it is like a 0.3165. And what we are going to do, we are going to multiply with the Gann levels, and when you multiply, you will get the number of days. Okay, 12, 25, something like that, and rounded off value you are seeing here, rounded off value. And you can also look after you can also take these values, but this is big numbers, and you can also take these values, but it is a very small number. Small number also don't work. What do you mean by small number? So you are going to look after one candle. So this is the swing high, right? After one candle, it's not going to be accurate. So that's the reason we are considering these double digit numbers. Okay, so let's go to the first 13. Let's copy this, all these numbers, and I go to the trading view. So I'm gonna take a text box, I'm gonna put it here. Okay, 13. So what is the swing high and swing low? This is the swing low and this is the swing high. Okay, from the swing high you need to see the 13th candle. So how do I do that? You cannot manually count. So instead I suggest you to use the date range tool. So if you go to the projection, if you go here in the trading view box, projection tab, you can see the date range, right? Date range. So click that. If you click like this, you will get the if you put like this, no, you will get the some values here. You can see the 37 bars, 51 days, and volume, right? What do you mean by that? What do you mean by 37 bars? What do you mean by 51 days? 51D means 51 days. So what is the difference between 30? Why two numbers is given? Volume is no, you guys know what is volume, but why two numbers is given? Markets or operates in Monday to Friday, right? Monday to Friday market works. Okay, so Monday to Friday is called trading days, TDs. Whereas you can, if you take Monday to Sunday, Okay, then that is called calendar days. Per week 7 days is the calendar days, but trading days is 5 days, right? Trading days 5 days, but calendar days 7. Okay, so we just need the trading days, we don't need calendar days, although in some occasions we will take calendar days also. So based on my research I found that some occasions we can take a calendar days also, but for this for this particular video I want to give you the trading day aspect. Okay, because market works in Monday to Friday, so Monday to Friday is a trading day, so we have to take that value. Okay, so if you see here 37 bars and 51 days, so 37 bars is nothing but 37 trading days, whereas 51 days is 51 d is nothing but a calendar days. So we don't want to take a calendar day, we want to take a trading day. Okay, now use this tool at the swing high, because swing low to swing high we have seen, so we are going to use this at a swing high level, exactly at the swing high level. From there we are going to calculate 13 days, 13 days, 13 bars. Right, now you can see here this, from this swing low 30th 13th candle is this, you can see here this is the swing high, right? From this high we calculated the 30th 13th candle. My speech I'm just rambling. Okay, from here 13th candle, 13 bars, what is that area? If you see that area, that's a swing high, right? Now listen very carefully, it's a daily chart, it's a daily chart. From here 13th candle, it's a swing high, means you can sell after that, right? So after and after that 3 days market was bearish, so you are predicting the reversal point well in advance based on the past data. Okay, 13th day, that is a reversal point. Now similarly, what's the next date, what's the next number? 25, right? 25, so extend this to the 25th. So where is 25, 23, 24, 25? Now 25 is here, this is the candle, is a 25th candle. But see afterwards what happened. Afterwards, this is not a swing point actually, to be frank, this is not a swing point. If it is a swing point then we can easily decide, but this is just a middle candle, somewhere in the middle of the trend. Okay, but afterwards what happened? Next day its market is bullish, and even after some time market is bullish. It is not broken below this low, market is not broken below this low. So after 25 day there was some momentum is created. Okay, it's not a perfect, but okay. Then 38 days, let's see the 38 dates. So 38 days, let's go here, 38 day, this is the 38th day, this red candle is the 38th candle. Okay, now if you see, it's a part of the swing leg, you can see this is the swing points, right? 1 2 3, so it's a part of the swing leg, so it's part of the swing high, right? 1 2 3, 1 2 3 candle is a swing candle, right? The third candle is 38th bar, so you can clearly understand that okay, the swing point is created, market is going to reverse. Also the third candle is part of the this 38th bar, right? So you can expect after this candle, you can expect the bearish movement. That is what happened, that's what happened. Now you can also predict this based on this, um, what do you call, there is an up movement, and market reached this level. Okay, it's not able to break that level, it went down, so it came back, reversed. Okay, you can do multiple interpretations, but after 38 days market, uh, what do you call, it's reversed, it's went down. So this is the big movement we would have missed. Now we are going to expect something on this day, we are going to expect something on that day. So if you can able to get the proper price action confirmation, you can still trade from that candle. Okay, so you can still do that, but we will, that is the later part of our analysis, we will discuss that in the future. So let's say 50th day. Now from here, from the same swing level, I'm going to take a 50th level, 50th candle. So this is the 50th candle, I think so. Yeah, this is the 50th candle. This red candle is the 50th candle. It's not swing high or it's not a swing low. So if I see, it's a kind of middle candle. There is no swing high is created, no swing low is created on that particular day. So maybe you can avoid that, or you can consider the break and retest, something like that you can consider, but nothing happened here. uh, Afterward market went down, but there is no swing confirmation here. Okay, so let's just leave it 63 days from here. So let's see, 69, 63 bars. I'm counting the 63 bars. Okay, bars, not days. So exactly what is that? That is exactly a swing leg. It's not a swing leg, but it's created after swing point. You can see 1, 2, 3 swing point. So this candle is created after swing point. Okay, so you can still take, you can consider from that swing low to that candle. So wait for the break and retest. You can buy, or you can look for buying opportunity within that candle. Within that candle, if you can go to lower time frame, like 1 hour, 4 hours, something like that, or maybe the 30 minutes. So you can look for some confirmation, you can look for buy. See, you are predicting the trend reversal. You can see here, from here market was falling down, but after reaching that point market is reversing. It's not reversing, you can call this as a retracement also, right? But still, it's a kind of retracement or reversal happening from that level, right? That is important. You are predicting that reversals well in advance based on the past price action. Okay, so that is important here. So let's go the next date. Next date is 75. So from here 75 dates, 75, 74 and 75. So you can see here, I think I have, yeah, here this is the 75th bar, 75th candle. That is part of the swing leg. You can see there is a swing point here. So that's the third candle of swing point, right? 1, 2, 3, third candle of swing point. So next day you can expect the swing low is created, so you can expect the market will be bullish. So next day it was retesting, right? The 3 swing point is broken and retesting, or I can say next day it is broken, and after some time it's retested here. So you can take, because it's a daily chart, right? It's a daily chart. If you go lower time frame, you will get multiple opportunities, but I'm just going with the daily chart. So it's retested here, and market is bullish for the next 3 days. Now forget about the 3 days. Even if you have 1 hour bullish movement, 1 hour bullish movement, it will give you 200 to 300 point, right? So that is more than enough for us. For a scalping per se also is more than enough. Okay, but here it is went up to 3 days, right? Now let's go with next date. What is the next date? Next date is 88 and 100. Let's take a 88th day. 88th day is somewhere here. You can see this is the 88th day. Now this is, in my opinion, this is part of the swing point, right? So it's not a perfect swing, but I can say 1, 2, this is also 2, this is 3. So 4 candle combined swing high is created. So it's part of the swing high, and so wait for the break and retest. So another 4 days it went down. 3 to 4 days, 4 to 5 days it went down, right? 88th day. Let's take a 100th day. 100th day. So 99, 100. Now you can see this is the 100th day. It's not part of the swing low or swing high, but you can see swing low already created here, and that 3 candle is broken over there. Okay, you can see this is the 3 candle, right? 3 candle created, and that 3 candles high is broken over there, where here, exactly here. So that is exactly reversal point. So this kind of confirmation, some sort of confirmation you will be getting. Okay, you need to look for that confirmation, and maybe you can mark this candle, wait for the break and retest. Break and retest. and market went up. And similarly here, break and retest, market went up for the 1 2 3 4, almost out of 5, out of 6 days, 4 days is went up. Okay, so this is very simple, very easy way to find the reversal points. Now this may fails also, as we see some of these levels failed, right, not given the proper confirmation. So it will fail also, but it will give you an idea where you can expect the reversal points. Now let's take some different market. Let's take a maybe like a Canadian dollar, Japanese yen. We'll take that, some cross currencies. Okay, and let just give me a second. I have annoying Telegram messages. Let me close my Telegram. Yeah, great. So I have taken the daily chart of Canadian dollar, Japanese yen. So I'm going to take a swing highs, and now I can take this swing high and this swing low, but future is, we don't have a data, right? You can take this swing high, this swing low, and you can predict the future. But since it's a daily chart, I'm going to take a maybe this low to this high, and we'll see whether these highs and lows are predictable or not. Now I'm taking the major lows and major highs. I'm not taking the interim levels. You can take interim levels also. You can, for example, this small swing high, right? Small swing high to swing low. These levels also you can take. Based on that, you can try to predict the future. But you know, sometimes they may not accurate. You know, one thing I wanted to tell you here, guys. I told you guys swing high and swing low, right? Gann also told the same. Gann also told you need to take a significant swing low and significant swing high. Within that, you need to find the difference, and you need to square root, and you need to multiply with the Gann levels. He also told that. But one thing he didn't told is which is the significant low or which is the significant high. He never revealed that. He never revealed that which is significant low, which is significant high. So that's the reason uh, this level, this strategy might may fail, because we don't know which is significant low, we don't know which is significant high. So Gann use astrology and astronomy to find the proper lows and highs, and that method is still unknown. It's still unknown. It is still with him only, and he died with that method. So that is the only problem with this method. If you know which is the significant low, which is the significant high, and from there, if you calculate, you can exactly predict the date of reversal or date of retracement or date of continuation or whatever, break of structure or whatever. You can predict that. Okay, so that is the one problem, but I'm still figuring out that. I'm still reading his books and materials, so hopefully I will also try to find something if my research goes well. Okay, so let's take a swing low to swing high. Maybe we'll, for the sake of this video, I'm gonna take a very small swing lows and swing highs. So I'm gonna take a this swing low to this swing high. Okay, this swing high. So let us predict the market, whether it is working or not. So what is the low point here? Low point here is, if I bring the mouse cursor here, you can get the low value in open, high, low, close data in the top. So I'm getting 108.62682. If you are wondering where I'm reading this number, if I bring my cursor here, you will get the open, high, low, close data. Okay, I'm taking this number low and this number high. Okay, so I'm bringing the cursor over there, and you can see 108.682. Let's go to the Excel sheet. 108.682, right? Swing low is 108.628. I think so. Let's go once again. Let's recheck once again. 108.682. 682. Okay, I just reverse the number. 682. Okay, then the high is, this is the high, and that is 112.294. 112.294. 112.294. Now you are getting the price difference here, and you are getting square root of that number price difference, and you are multiplying with the Gann level. You are getting the dates here, and rounded off dates. And this time this is 2 digit, so we can take this. We don't want to take this. We don't want to take this. Okay, let's take a 14 days. Let's copy this, and put it into the text box here. Okay, now swing low, swing high, right? From the high, because we measured from the low to high. If you measure from the high to low, then from the low you need to begin. We are measuring from the low to high, right? So from this high, 14th candle from this high. So let's put the tool. 11th bar, 12th, 13th, 14th. This is the 14th bar. Okay, now if you see, the market is ranging for a long time, and it has created the high part. I mean the 14th candle is here. Okay, let's move this a little bit. You can see this is the 14th candle. Now unfortunately you have a swing low confirmation. It's a swing low, part of the swing low, and after that market also reversed, but unfortunately it's broken down, liquidity taken, and afterwards only it is reversed. So this is failed. Okay, in my opinion this is failed. These levels are not worked. Now let's go to the 27th, that is the second day, 27th date. So that's the 27th candle is this big red candle. This big red candle is the 27th candle. Okay, now that is part of the swing high. 1, 2, 3, right? Swing high. So you need to wait for that candle to complete. After that only you need to take a trade. So break happened, retest happened here, and 2 days market went down. Now if you see here, it is not perfect, right? You are not getting the ideal results, and here also it is failed. Here also it is given, but it is not perfect. Why? Because we took a minor low and minor high. We are not considering the major lows and major highs. We are taking the in between, some random highs and random lows. That is the one reason this is not working properly. So that's why I told you guys, you need to take a significant high and significant low. Anyways, we'll check this. 39 days from here. So let's go. That is the 38, and that is the 39 candle. This is the 39th candle. Okay, you can see 39th bar. And what is that bar? It's part of the swing low. After that you got a swing low is created, and it is also part of the swing high. You can see it is also swing high and it's also swing low. So that is kind of an indecision level, because you are waiting for the break of this candle. So ultimately break happened into the upside, and retest also happened. Not a big movement, but anyways, the 1 day up movement happened here, and 2 day up movement happened here. Okay, and as you see that these levels, smart money levels, already touched and market gone up. That is a different story, but you are going to combine everything later point of the time, not now. Let's go to the 52 day, 52, 51, 52. Now you can see it is giving the swing lows and swing highs, but not ideal swing lows and not ideal swing highs. This is also swing high, but after that market went down, then market reversed. So if you took a sell entry here, you would have failed. So why this way? Why it's not giving the accurate results? Because, as I told you guys, we took a random low, random high, somewhere in the middle. So that's the reason it is giving you the swing levels, but that level is not complete level or accurate levels. But still worked. Still swing high is created. The reversal point is created, right? So that you need to understand. So similarly, 64 days. Let's see the 64 day. So 64, 61, 62, 63, 64. 64 is the out of nowhere, out of middle it is created. So yeah, afterwards market is gone above. So I don't know how we will be trading this, but it is created, right? And let's go 77th day. 77, 72, 73, 74, 77th day is again a swing low. You can see this is a swing low, but what happened? Unfortunately, market reversed and fell down. Okay, so technically it should give this swing high. If it is given the swing high, we could have taken the sell entry. Since it is given the swing low, we would have taken the buy entry, but then stop loss would have hit. So we would have missed this major down movement. Why we would have missed? Because of our analysis based on this small up movement, small uh, difference of the price displacement, right? So that's the reason. That's the reason all these levels are giving you the wrong signals. Anyways, we don't need to check further because it is anyways going to give you the wrong signals. I mean, not wrong signals, it's giving you the swing point but at the wrong time. Okay, it is predicting the swing points but in the wrong time. Okay, so that's the reason we should look for the significant highs and significant lows. So in my opinion, this is my high and this is my low, because a big down movement happened from here to here. So if you see this significant high and significant low, from there if you predict the future, that that might be the accurate one, that might be the accurate way of uh, trading, okay, analyzing the market. So let's take this high. What is this high? This high is 118864, 118.864. Let's go to the Excel sheet. 118.864. Okay, and that is a significant high and a significant low. This is the significant low. So 101.660, 101.660, 101.660. So difference is 17 point and square root is 4.14, and Gann levels multiplied with the square root level, you get approximate, I mean exact date, but we have took the rounded off dates. So take the rounded off dates. You don't need to take, you can take this also if you want, if you have patience. 170 days, if you are ready to wait, you can see that also, but I'm going to take a 17 days first. Let's copy this, copy, and let's go and paste. It's here. Okay, 17th from this low, 17th candle. Let's see the 17th candle from the low. From the low, 8 candle, 12, 14, 15, 16, 17th. Now again, this is not a perfect one, but you can see it's after the swing low. Swing lows created before that, also swing low created. You can see, let me move this like this. You can see the swing low created here, you can see swing low created here, you can see swing low created here, and after all these swing lows, it's given the signal here, that is also swing low. Okay, so if you know swing importance of the swing low, right, you have a WBW also here, and you mark that level, and you just need break and retest. So break and retest happen here. So next to 2 days it's up movement, not a efficient movement, but of course a small up movement, it's still big. So how much you would have made if you like mark this WBW and wait for this reversal point. Reversal point happened here, and if you take a buy entry here, how much points is moved? Let's measure this from here to here, 2 days, 1600 point, right? Isn't it enough for our next 3 days? Even if you take a one day up movement, it's 1200 point. So forget about 1200 point. If you capture some 500 point, 200 point, 300 point, that is more than enough for us, right? Even a 700 point is more than enough for us. Okay, so you need to understand that, right? Now let's go to the 29th candle. Now also you need to understand one thing. Sometimes this value work better than the rounded off value. Okay, so if you take a 16th day instead of 17th, if you without rounding off, if you take a 16th in the same chart, so what would have happened if I take a 16th date? So that is part of the swing leg. You can see that is a swing low, that is a part of the swing leg. Third candle of the swing low, it's 16th day. So you could have captured the movement from the next day itself. Okay, sometimes that happens, rounded off value not properly going to work, so you can play around with that. Okay, play around with that. So here is a 29 day, it's also 29. So let's see the 29th day from here. So 20, 21, 22, 23, 24, 25, 26, 29, 27, 28, 29th, right? That is a 29th candle. This red candle is a 29th candle. So that is part of the swing leg. So when you will know that it's a part of the swing leg? After 3 candle only you will come to know this. So first candle, second candle, after third candle only you will come to know it's a part of the swing leg. So you can wait for the 3 days and mark entire swing point, wait for the retest, something like that. Okay, but you can expect that, okay, in this candle something is going to happen. So that can be a third candle of swing leg, or that can be a first candle of swing leg, right? In swing point you have a 1 2 3 candles, 1 2 3 candle. So 29th day is the first candle. Sometimes it can be the third candle. So after this there will be a swing point will be created, or it is part of the swing point. So that you need to understand. Then you will be marking and you will be waiting for the break and retest, and you will be buying. Right, couple of days waiting, but still waiting is worth, right? It's very worth waiting. Then 42 days. 42 days. Again, guys, this is not a holy grail. This is just idea. You can we need to learn a lot. I need to learn a lot about from the Gann. So it's a kind of idea you can implement. So if you see this one, it's the middle of nowhere, right? It's middle of nowhere. This candle, because swing low is here and swing high is here. It's middle of nowhere. But one interesting thing here is you have a imbalance here. Maybe you can combine that imbalance also, because something has happened here. So market will retest this candle. Okay, but I'm not going to talk about that right now, because we are still in the early phase of this kind of trading method. Okay, at least I am in the early phase of this kind of trading method. So it's 54 days from here. 54, 51, 52. Oh, today is the 54th day. Great. Today is the 54th day. Today is Friday, 18th of October, Friday. So you cannot trade today. You need to wait for this candle to close. And if you see Sunday, if it is a swing high or swing low, then Monday you can, according to that, you can trade. Okay, according to the price action. Similarly, you can predict for the future levels like 67. 67 will be 67th bar will be here, and you can put a vertical line over there, and you can look for some sort of reaction from that level. Maybe from the swing low, swing high will be created from that level, and afterwards you can take a trade, right? So this is very pretty simple. It's mathematics based. The whole idea of this is just you need to understand that price, the formula of this is very simple. Price equal to time square, time to the whole square. This is the formula of this particular calculation. And if you do opposite, time is equal to square root of price. So square root is, I think you know what I'm telling. Square root is, this is square root. In mathematics you studied this in 7th standard, right? 4 square root of 4 is 2. Square root of 64 is 8, right? Something like that you studied. And time square is nothing but time to the power of square. So 2 to the 2 square equal to 4, right? 2 to the power of 2 is 4. So time square is the like x square, y square, something like that, the mathematics formula. Okay, so this is the two formula. Based on this is constructed. So time equal to square root of price. Time equal to square root of price. So what we are doing here is we put high price, low price, we find the difference between the price, and we are taking square root of price. Square root of price is 4.147. Okay, based on that we are predicting the dates. Now if you watched my earlier video, which I shared with you couple of hours before, trend line based, that is based on price equal to time square formula, this formula. Okay, I have given this, right? So like there's a distance between two low, and you put like this, you will get the level, right? This is I have given in the previous video, right? So this is based on price equal to time square formula, price equal to time square formula. Okay, but this calculation is based on time equal to square root of price, this formula. Okay, both are same but different perspective. This is based on this, and the trend line, the previous video which I shared, right, that is based on this formula. Okay, I will explain that in the maybe in the another time. All right, so I'm sharing this with you guys with the Telegram. You can go through this Excel sheet, and you can whatever strategy you learned from the bootcamp, WBW, smart money strategies, supply and demand, and whatever swing point strategies, whatever we learn. No, you are going to combine with this with that. Okay, you don't take trade straightforward with this method. Combine with the smart money strategies, and then you can define the what do you call, you can have some confluence with that. Okay, so hopefully this video helpful, and let me know in the chat box, comment box, and if you want more on this, I have a more method for this. I have been working with different. Let me show you some of my working. So I am showing this working here. So I have been working with the different datas here. So you can see here, this is Gann square. I'm working with this, how to find the support and resistance, and all those stuffs. I'm working with these formulas and all those stuffs. Okay, I'm just reading. Basically, I'm reading the Gann's books, and I'm also watching some of the videos in the internet. But most of the videos are not very much clear. To be frank, they were hiding something, or they don't know that something. Okay, so I don't want to hide anything here. I'm just sharing whatever I learned from the Gann's book, and some of the videos which I watched in the internet. Okay, so yeah, hopefully this video is helpful, and I just need your serious feedback. Just go through this video and let me know your feedbacks and findings also. All right, thank you so much. Bye, have a great day.